Traders at Axis Bank expect buy-side sentiment to persist in the Treasury bills market, supported by the improved system liquidity from FAAC inflows. On the bond side, investors are taking position ahead of Monday's 350 billion naira bond auction. Ibukun Omojufehinsi, Treasury Team Member at Axis Bank, joins me for more market movements. Ibukun, thank you for joining us today.
Good morning. Thank you for having me.
Right, let's get right to it. Bring us up to speed on market trading updates so far today. Let's start with the money market and liquidity levels.
So market liquidity opened in a credit of 1.9 trillion. This is 900 billion from previous day levels. Consequently, we saw the OPR stabilized at 26.5%. So this is the rate banks actually even lend to the central bank. While we saw the overnight rates decline by 3 basis points to close at 26.85%. So currently now the market is awash with liquidity, and in a bid to remove some of this liquidity from the system, the CBN, just during the trading hours today, issued an HOMO auction. So there will be an HOMO auction today of 500 billion today. So we pretty much expect this HOMO auction to be able to remove a bit of the liquidity in the system.
Right. What about the bond market? Where on the yield curve are you seeing the most action?
So I'll begin from the Treasury bills. So just on the Treasury bill space, on Wednesday, there was a T-bills auction where the DM actually offered 400 billion. But one of the things that I pretty much saw that there was an oversubscription of over close to 4 times of what the DM was actually offering. We saw a subscription of 1.5 trillion, but the DM only offered 714 billion. We saw stop rates across the maturities at 18%, 18.5 and 19.6%. So these rates are actually a decline of 50 basis points, 100 basis points, and 3 basis points from the previous levels where these T-bills actually even closed the previous time. So yes, we're actually even seeing some activities along the T-bill space. So post-auction, what we are seeing currently is that we are seeing some of the market participants taking profits. For the long end, we are seeing it's currently trading at 19.4%, which is a 200 basis points from where it was actually even issued. While on the short end, we are seeing it's currently trading at 17%. On the bond space, what we're pretty much seeing is that we are seeing some activity on the 2029s and the 2023s. If you would recall, yes, the DM actually even issued a calendar whereby they plan to borrow 900 billion to 1.2 billion this quarter. But for this month, the DM is actually even they are offering 350 billion, 200 billion on the 2029s, and 150 billion on the 2033s. These bonds are currently trading around 19 and 20% respectively, and we expect these rates to remain stable, and we expect stop rates to be around these levels.
All right, but for trading in the coming week, what are you expecting? I know that investors are already positioning ahead of Monday's 350 billion bond auction. What kind of outcome are you expecting?
So for the auction on Monday, we're still expecting rates to still be around this 19% to 20% for the 2029s and the 2023s, as I earlier stated. So yes, we've been seeing some interest from the FPIs. They've been coming in to buy some bits of these instruments, and we've also seen some interest from pension funds and some of these assets, from some of the asset managements. So we expect rates to still remain around this 19% to 20% for these instruments.
Ibukun, thank you so much for talking to us today, bringing us up to speed. We appreciate your time on the show. Ibukun Omojufehinsi, Treasury Team Member at Axis Bank.